Oil is lower this morning as September trading gets underway. Demand concerns have escalated as China, the world's top importer of oil, locked down Chengdu on a flare-up of COVID cases. The volatile macro environment has investors shunning risk assets, including then commodities, pushing the greenback higher. So the dollar is higher and commodities are weaker this morning. Joining us for more is Bloomberg's European oil editor, James Herron. James, very nice to have you with us. So oil has been sliding. It's actually been sliding for a few months now, give or take a bit of volatility within that. Does the slide in oil prices look set to continue?
There's certainly the bearish forces, the demand concerns, don't look to ease anytime soon. One of the reasons that prices were more buoyant during the summer was that people thought that China had COVID finally behind it. This latest flare-up shows that's not the case. And the anticipation of stronger demand from China was seen as offsetting the economic weakness in the Western economies. And so, again, if you can't rely on sort of Chinese growth to offset that, then, yeah, the demand picture looks quite weak for a few months to come, certainly.
OK, right. We'll see what happens with China and its COVID policy into November and those important meetings taking place there. What about OPEC Plus and the way it responds then to this current demand picture? Because we've heard from the Saudi Arabians that there was the possibility of cutting back production, even though President Biden went all the way to Saudi to ask them to boost production. We've got an important meeting coming on Monday. Yeah,
and the comments from the Saudis really show how the calculus in the oil market has changed. For months and months and months, the pressure was all like, OPEC, we need more oil. The market's very tight. And suddenly, they've gone from increasing every month to thinking about cutting back. Now, whether we see that on Monday, it remains to be seen. That would be a very sharp U-turn for them. And the other thing that's going on is the negotiations between the West and Iran continue. The possibility that more production could come from Iran is still very uncertain at this stage. So they may wait and see what happens, at least for the next meeting.
OK. And what about the outlook for oil supply for the rest of the year? You've mentioned Iran. That's a bit of a wild card, perhaps. I was reading about questions around Libya. For a period, people had questions around Iraq, although maybe that's gone away. But what does the supply story look like?
Yeah, well, the Iran deal, we'll see things are happening again there, but we've been in this position before where we anticipated a deal and it never happened. Iraq, too, there's a lot of political turbulence there suddenly. And of course, the big thing that we know is going to happen is by the end of the year, Europe is going to ban most purchases of Russian oil. Russia has managed to adapt so far to other sanctions on its oil production, oil exports since the invasion of Ukraine. Whether or not it can do that again at a much bigger scale with the amount of oil that Europe will no longer be taking for it. So, again, there's a question of, like, there could be a big supply disruption, but maybe it could be smaller than people perhaps anticipate.
Yeah, on that front, I mean, does it just mean that different people buy Russian oil and the people who are not buying Russian oil buy other oil? Are we just sort of shuffling the oil pack, if you like, rather than cutting back on production, this EU rule change that comes in?
Eventually, yes, but there's always a period of adaptation where supply chains and shipping take a while to adjust, so you may see a drop in Russian production and then a rebound. That's exactly what we saw when the initial round of sanctions came on in February, where it dropped quite low, and by the midsummer, it was almost back to pre-invasion levels. So we may see a similar trend again.
OK, James, thanks very much.